All right, let's talk a bit about this. So we see what the president's push is against renewable energy. However, you operate on state lands in California. You don't really operate on federal land. So does this have an impact on your business, at least when it comes to sentiment?
Frank, no impact. We see ourselves as a different kind of energy company, and we do both renewable, clean energy and traditional oil and gas. We are the largest producer of oil in California, also the largest producer of natural gas. We also have a power generation business. And we really think about the three C's. It's cash flow, it's carbon, and California. Cash flow, we look to grow cash flow per share. We also look at carbon management. It's our clean energy business, our high growth business that's looking to decarbonize businesses like data centers and cement. And we're also California only, a California built company serving the market here. Over 40 million Californians that need clean, reliable, and affordable energy. So we can do both. We can serve the market needs for the fuel today, and we can also provide energy solutions for the future.
Okay. You operate almost exclusively in California, but it's a very big economy. If it was its own country, it would be one of the bigger countries out there in the world. So I want to ask you about demand. As we see the Fed potentially looking to cut rates, we saw kind of a dovish Jay Powell at Jackson Hole. Have your customers signaled to you that they see their demand needs picking up?
Yeah, demand is massive. California is the largest economy in the U.S., fourth largest in the world. We haven't really seen any demand decline on our product. We only see that growing. It's in particular natural gas. So we're ready to go. We're working with the state of California to bring back more California production. The issue that we have, Frank, is that we import about 75% of our oil. It doesn't meet the environmental standards of the state. It also affects prices, and we pay some of the highest prices in the nation. 40%, families in California pay about 40% higher prices than the rest of the country. So we're working with the state. Local production is the answer. It's safe, clean, closer to home, and it supports local jobs. So we're working closely with the California government. We're encouraged by Governor Newsom's focus on prioritization of more California barrels. We think that's the answer that ultimately is going to satisfy that demand. Okay.
A lot of investors are looking at your interview right now. Again, your company's mostly based in California, so they're trying to figure out if they should invest in your company. Also want to ask you, we also saw the one big beautiful bill, the president's spending and tax bill that was supposed to increase CapEx spending and also offer bonus depreciation that would potentially lead to more companies building and developing projects. Are you seeing a boost from that? I know you said from Jackson Hole you haven't seen anything immediately, but what about from that? Are any of your customers signaling they're just going to need more natural gas, they're going to need more oil for upcoming projects?
Yeah, absolutely. We're going to need all of the above energy. We really need more oil, more natural gas. But what we're trying to do in California is really drive carbon management. Carbon management is a technology that's been around for 60 years. And we're bringing it to California to decarbonize the sector. We see a lot of infrastructure being built. We're partners with Brookfield to bring capital into the state. So we're seeing a big uptick in demand for decarbonized products and energy of all kinds.